Okay. Hello, I am Taylor Gibson with Optum Office, and today I'd like to speak to you about some recent developments around primarily concerning PPP, or the Payroll Protection Program, to a lesser extent the EIDL, which is the Disaster Relief Loan under SBA, and FFCRA, which is the government-funded sick leave that you can get money back under tax credits. Okay, so here's our standard disclaimer. The material presented in this presentation is in summary form for informational purposes only. If you have any questions about the details of either CARES or FFCRA, please contact us at info@optimaoffice.com. So here's the update as of midday on Thursday, 4/23. If you go to the SBA website, it shows a notice of lapse in appropriations for both PPP and EIDL. I think this is something everybody's acutely aware of. The funds available for PPP were exhausted in 13 days, and the EIDL program ran out of money shortly thereafter. Many PPP applicants were shut out at their banks. Most just received word that their application was accepted at their bank, then no further communication on loan either being approved or even submitted to the SBA. So what is happening? What happened in the round one of PPP? Look, simply put, legislation was rushed, and it took time to understand how the program was supposed to work, causing delays at most banks. Many banks were criticized for prioritizing loan applications to their customers that had outstanding debt obligations with the bank and those that had significant deposits on hand. However, there was a winner in round one, and this would be the small banks. 20% of the loans that were processed went to banks with less than $1 billion in assets, and a full 60% of all loans approved during round one of PPP went to banks with $10 billion or less in assets. However, there was a great disparity among the states and loans that were approved. So let's look at this. Here's a map of the United States that shows PPP loans as a percentage of eligible payroll. So if you look at the lighter states, they're the ones that got less money. And in fact, California ranked dead last among all 50 states. And indeed, 33 of the states received a funding amount 50% higher or more as measured by this metric than the state of California. You can bet that not only California politicians, but those from New York, which was 49th, and some of the other big states, which were also shortchanged relative to some of the states in the middle of the country, they're going to be clamoring for a little payback in the second round when and if it gets approved. So what is happening in Washington right now? Well, on Tuesday, 4/21, the Senate approved a bill for an additional $310 billion into the PPP program. And this is expected to go to the House for confirmation today, Thursday, the 23rd. So I've been following this, and let's check to see where they're at. Yeah, okay, looks like, yes, it looks like this is going to be approved. They're voting, but every indication is the votes is not going to be held up. So one of the significant changes in this round too will be that $60 billion has been set aside specifically for the smaller lending institutions like credit unions, community banks, to get more funds to small businesses, which was one of the shortcomings that people noticed in round one. However, it doesn't look like, looking at this, it doesn't look like a date has been set for reopening of the PPP loan window. And more importantly, doesn't look like a round three is in the cards. So you need to get in on this round now. What's available to you now? Well, I think that some of this is a little outdated, this slide at this point. Big one is the first one. You can defer all your payroll taxes in 2020 and pay half in 21 and half in 22. So what should be available soon? Well, now we know that it actually will be available. There will be additional money into the EIDL, or the Disaster Loan Program, which has a $2 million max, Standard loan, 3.75%. Could be good for you, but you can use it for any purpose that you want except for growth. And you will have to pay this one back. But the big one, of course, that everybody wants to get in on is the Payroll Protection Plan, which has a maximum of $10 million. And this loan can be forgiven if you maintain your headcount and spend at least 75% of the loan proceeds on wages and benefits. So what should you do now? Well, the circumstances are changing daily. We just saw an update recently, so you need to stay informed and be ready to act. Quite frankly, the time to complete your loan application was yesterday, but I implore you, if you haven't done it yet, do so right now. Don't wait, don't delay. If you are not approved in round one of PPP and already have a loan application that you've completed, you might want to consider submitting it to a second application to a community bank or a credit union, especially because of the $60 billion carve out. And it also looked like they were more successful in getting through to the SBA. Maybe they have, less constriction in their pipeline, not sure, but it looked like this was a pretty good way to go. If you need any help, please seek guidance from a financial expert. At Optima, we've created an SBA task force, which is here to help from completing your loan application, helping you source the right bank, and setting up proper accounting. So if you would like, you can contact us at info@optimaoffice.com. So what are the next steps that once you have a loan in place? Well, we suggest that you open a separate bank account to monitor and control all funds received under PPP so you can track their disbursement. You should also create accounts in payroll, rent, utilities, and other items by adding PPP to the name so you can track expenditures that qualify for loan forgiveness. It's also highly recommended that you prepare a new 8-week forecast to ensure all expenditures are meeting guidelines set forth during this covered period. And finally, you will need to create new accounts in payroll under FFCRA, as you are not allowed to include these in your pending PPP forgiveness calculation. So speaking of the loan forgiveness, I think most people know what it is. The big one is the amount forgiven is going to be based on a percentage of the headcount that you retain compared to the prior period or what you submitted with your PPP application relative to what you have during the 8 weeks after you get the loan. It's going to be based on full-time equivalents. So if you need help, you can contact us with that. And remember, if your headcount drops more than 25%, you lose all forgiveness. And finally, up to 25% of the loan proceeds can be spent on non-payroll items like rent and utility. I don't know if we need to really cover this. The SBA Disaster Loans or the EIDL is now back in place. Just remember that there is no forgiveness on this loan, and you will go through a standard loan procedure with credit checks and potential guarantees. So this may take 3 or 4 weeks before you get money in place. The Families First Coronavirus Response Act, or FFCRA, is something the government decided to put in place to provide sick leave due to COVID-19 for companies with 500 or fewer employees. If someone is sick with COVID-19 or caring for a relative, they are eligible for up to 80 hours of sick leave pay from their employers. The rate of pay varies depending on the reason, with a maximum of $500 and $11 a day if the employee is sick, and $200 a day if caring for a relative. Additionally, there's another provision in this called the Expanded Family and Medical Leave Act, or EFMLA, which provides an additional 10 weeks of coverage up to $200 a day with a $10,000 maximum. Some of these provisions are a little tricky, so again, we advise that you contact a human resource professional to ensure that you've interpreted these correctly. Additional provisions. Well, I think we've covered most of them, but CARES is not just about loans. Remember, you can defer all 2020 payroll taxes during this calendar year and pay half the deferral on 12/31/21 and the remaining half on 12/31/22. So moving forward, we strongly encourage that you evaluate current operations and create a specific plan on how you and your employees can get the most out of the CARES and FFCRA. These are once-in-a-lifetime provisions the government is extending to help companies in this crisis, so please take advantage of them. You will need to stay up to date with announcements as the environment changes rapidly, as we saw just during this presentation. You should make sure that you've informed all your employees of the benefits that are afforded them under FFCRA. And finally, put new accounting procedures in place to track all COVID-19 related funding and disbursements. If you need any assistance or guidance in ascertaining what to do with the provisions in CARES or FFCRA, you can contact us at info@optimaoffice.com. Thank you for your time and good luck.